Okay, Arvind Sanger is with us, Managing Partner at Geosphere Capital Management. Arvind, good to have you with us here. Thank you very much for your time. Good morning. I think it was so stark that the money, there was there has been intense foreign selling in India for the last 3 weeks. A lot of that money has gone to China, as many have told us. More than usual interest in what China is announcing and whether that market will continue to attract flows. It'll remain exciting. What's your sense? What did you make of it? What came out of Saturday?
Well, clearly Saturday was disappointing. There were no specifics. People were hoping for 2 to 10 trillion anywhere near. I mean, anything above 2 trillion would have been seen as positive. So that was disappointing. But from our standpoint, the real story in terms of where we are is that, China remains for us a trade. It is not a fundamental long-term investment. And I think the trade is that it is an oversold market. A lot of pessimism has been built up, rightly so, for the last couple of years. There is some hope that once the government has pulled out its bazooka, it's not going to allow it to fail. But clearly, they're being rather cautious. And there's one other fly in the ointment for China. If Trump is ahead by a nose and it becomes the next president, that's going to put another headwind for China. Because he's clearly focused on especially singling out China for significant import tariffs. And that would be, the government would have to not just do what they're doing now to offset the current weakness, but to also think about what kind of bullets they might need to keep in reserve in case Trump wins and he intends to follow through. So I think the China trade is going to have some volatility around it. And, India, I think the thing to focus, in our opinion, on India, other than the trading money going out, is what is going on with the India growth story. You talked just a few minutes ago about industrial production. I think there are some signs that the Indian economy is going through a bit of a slowdown. And this quarter will be very important to see how much, if any, of a slowdown are we seeing, and how does the outlook look for the second half of this fiscal year and looking into, the next fiscal year.
Arvind, hi, morning. Yeah, one would hope that this, contraction in output, this is just a temporary sort of passing phase because of the low base, and the monsoons have been really extended. By the way, it's still raining in Mumbai over the weekend. So one would hope it's just those factors and nothing more structural in nature. But I completely take your point on earnings, because we've been speaking to a lot of, local brokers here, international brokers here. And I think the expectations are running fairly low, single-digit earnings after a long time. Do you think the market has started penciling that in? Because we are off 4-5% from the peak. Just dwell a little more on earnings, what the expectations are, what the mismatches could be, and whether that will become a trigger for another leg down.
Yeah, I think it's easy to blame the monsoon, but monsoon can also be a positive from optimism and low inflation of the things that are positive that comes from a good monsoon. I've not heard good monsoon use an excuse for earnings slowdown. So yes, maybe the industrial production data could have been affected by that. But in general, we're seeing signs that the economy, from many metrics, is showing some signs of moderation. I don't think it's anything more than kind of hopefully just a mild pause in a long-term upcycle. And I don't think there's any data that suggests that anything more than that. But I think it's something to keep an eye on. I think that, we're still not convinced that the market has pulled back so much that it's become screaming buy. But maybe some of the, mid and small caps, if they pull back a little bit more, valuations might get into a reasonable range. But, the reality is the Indian market was expensive and is still expensive, maybe slightly less expensive than it was, but not hugely so.
All right. Hi, Arvind. Good morning and good to see you. Arvind, but there are pockets of the Indian markets that really haven't moved, like the private sector banks here in India. Valuation-wise, they're trading at the same multiple, say, 24 months or so ago. Your view on this space, because valuation-wise, there is some comfort and we are seeing some interest. And the past week, some of those banks came back to life.
Yeah, no, I that's one of the areas where we have found value too. Because of, again, we're not taking a 3-month or 6-month view, but if we take a 1 to 2 year view, then India's, private sector banks, some of the leading banks, are trading at valuations which, compared to the rest of the market, are very reasonable. and compared to their own history are reasonable. And I think the main challenge has been the loan to deposit ratio. But you are seeing, loan growth slow down, which may be part of what's causing the economy a little bit of a headwind. But you're seeing deposit rates exceed loan rates for a few banks, and if that rebalances, then that gives another leg to the whole growth story, because the Indian economic growth cannot survive without significant participation from private sector banks. And so we see that as an important part of the growth story, and we think the valuations do create opportunities in these banks.
Got it. All right, Arvind, appreciate you joining, and thanks a lot for giving us your take on the market's global setup, as well as a couple of sectors that you do like.